Welcome back. Dick's Sporting Goods shares under pressure this morning despite reporting strong comp store sales, bullish guidance as well ahead of the holidays. The sports retailer recently completing its acquisition of Foot Locker says it's planning to close some of those stores. Dick's Sporting Goods Executive Chair Ed Stack joins us exclusively at Post 9. It's a treat to have you. Welcome, Ed.
Thanks for having me.
I mean, the numbers and the fundamental underlying business seems very strong. Do you agree?
Oh, they are. They're great. The Dick's business has been great for quite a while, and our comps at 5.7% were great. We beat the street's estimates around sales and DPS, and the Dick's business has been great.
I guess the concern centers around Foot Locker and this acquisition and how Foot Locker is performing and how aggressively you need to be cleaning it up.
Right.
So what's the story?
Well, what we're doing is really, I think the street, we're cleaning out the garage. I think it's good to give people a visual. And so the Foot Locker team, we talked about it. We said, we got to go in here. We've only owned it for about 10 weeks right now. We said, we need to go in and we need to clean out the garage. So we got to get rid of all the old inventory that's there that hasn't worked very well, impair some underperforming assets. And that's what we're doing.
Yeah.
Stores and then some other assets. And we're really being really aggressive to do this. I think our shareholders want us to do this and get it done one time between the third quarter, fourth quarter, be the vast majority of it's done, and then really get a fresh start in 2026.
Well, what does Foot Locker help in terms of your business? Does it help with vendors, and how do you turn it around?
Well, we'll definitely turn it around. We are extremely confident in the ability to turn this around and the plans that we've got. We've got all the vendors that we've talked to are really supportive of what we're doing with Foot Locker, and they want a strong, vibrant, growing Foot Locker. It's not only good for our business, but it's good for their business also.
Did you pay too much for Foot Locker?
I don't think so.
Why not?
Because I think when we take a look at the value creation that we can do with Foot Locker, what we think the sales can go to and what the margin rates can go to, and the low-hanging fruit there, I think we'll find that as 26 and 27 and 28 go on, we'll come back here and you'll say it was a great deal.
Well, given your track record, I certainly wouldn't doubt it. But what gives you this confidence?
When we take a look at what Foot Locker really got kind of lost retail 101, and they didn't move quickly enough when Nike pivoted from a DT to a DTC standpoint. So they didn't move quick enough to move with other brands and really kind of try to offset that. And right now, Nike's back fully engaged in Foot Locker, so is Hoka on what the ability of us to do, be able to reinvent the stores from a merchandising standpoint. We are extremely confident. We've just started an 11-store test. Now, it's only 11 stores, but an 11-store test, we took all the product out and changed the way we present it in the stores. And if you walked into Foot Locker right now in the majority of the stores and you looked at the wall, it's basically merely a run-on sentence of shoes. You don't walk in, you don't see anything that's really important. We're not really communicating to the consumer what's important, what the hot shoe is, and we've changed that in these 11 stores. And we at Dick's we're pretty good from a merchandising standpoint. We can bring that merchandising expertise to Foot Locker.
Yeah, no, I mean, Jim was mentioning it, Jim Cramer this morning, as his mad dash, because he said otherwise, given your guidance especially, the stock should be up. Right. Do you think that it is largely because of those comp store sales declines that people saw at Foot Locker, the stock is actually down this morning?
Absolutely. I think they're just concerned about what's going to happen. Like I said, we couldn't be more confident about Foot Locker. We couldn't be more confident that we're making the right decisions to kind of, as we say, clean out the garage right now, do it one time, and not have death by 1,000 cuts, so to speak. So we're getting it all done, the vast majority of it done between the third quarter and the fourth quarter, and we'll have a fresh start in 2026. And we think there'll be a real inflection point for back to school, which will be the first year that we have bought all the product, laid out all the product, did all the purchasing of it. And another thing that gives us a tremendous amount of confidence is Foot Locker really, I don't know if they exited the apparel business. When you go into a Foot Locker store, there's not much apparel there anymore. These 11 stores that we've done, re-merchandise those. You'll see a lot more apparel in there. The apparel's doing really well. And we see a lot of nuggets here that will change this business around, and we'll do it pretty quickly.
Is it a legitimate concern that you finished cleaning the garage just in time for the employment backdrop to weaken? We've already seen these confidence numbers come in pretty soft.
Yeah, I think we're doing exactly what we're supposed to do when we're supposed to do it. And the consumer out there, whether it's in the Dick's business or in the Foot Locker business, what they really want is if there's product that's new, innovative, that they feel are going to help them perform better, look better, that new product is selling really well. If it's old product that's been around for a while, it's not selling as well. And that's the one thing that Foot Locker doesn't have right now. They don't have all of that new product in there that they need to have. And by the time we get to the third quarter, we'll have that product in there.
How much of that?